Hello everyone, this is Brandon from Galaxy Stock Market. Welcome our community members. This is our weekend video looking ahead for next week's trading, which is for the November 17th to November 21st. And so as the title suggests, this is a bull-bear battle. The market is primed now for a correction/crash. It just has not done so, but we are in that time zone, which basically came into play for our cycle analysis on November 8th. And it is a fierce battle. The market is off kilter, and we're going to go over all the components of that I think is important to help us to understand this very volatile market. And those of you following on Twitter and YouTube, our members get this video over the weekend so we can prepare ahead, and these come out a little bit later for you all. But today is November 15, 2025. It's about 7:20 a.m. Eastern Standard Time, and it is Saturday as I make this video. All right, here's the disclaimer. Pause it, read it. If you are not part of our membership group, this is something that you need to read and move forward. And thank you so much for following us at x.com and on YouTube. Please like, subscribe, comment, and share. All right, so this is important. So where are we on this 2008 to 2009 financial crisis analog? And last week, I had said that we might have been here and entering into this phase. And so this is where we are right now on this week. Okay, and we get these little rescues at the end, and I think we're still in that phase coming in. And however, you'll see that it takes some time with a lot of these sharp bounces and late day rescues as we come in, especially on Fridays. And these are normal price actions. And and you can see a lot of the Fed interventions leading up into this 2008 to 2009 financial crisis. And then we get the bottom dropping out. We have not seen any of the bankruptcies yet, other than something small like Tricolor, First Brands. But the contagion is real. And, we're going to talk about what the New York Fed did over the weekend right before the market closed, and no one knew about it because it was never scheduled, but they had an emergency meeting with the Wall Street firms and banks, and I wonder why. It's because of the debt implosion clearly identified by 10-year yield and the US dollar, and we'll go over all of that. But just understand that if we were to follow this analog, we are somewhere right here. We keep getting these rescues, and we're waiting for these markets to finally start to break. And we had a doozy of a day heading in, and then of course the market gets rescued, and that's not something that's abnormal. I mean, you're going to get these rips and dips throughout the day, at the end of the week, especially on Fridays. You're going to get these rescues the last couple of hours of the market, and that was absolutely true of this week's trading. And looking ahead to the next week, it's going to be one and the same. We just need to be able to make sure we don't get chopped up alive on these rips. These few days of rips that come in makes it look like the bottom is in, or that the bull market will continue. And that is something that you're seeing it right now. As they always say, bulls and bears both lose money during market corrections and financial crises. Okay, the trick is to stay ahead of the game and not die by a death by 1,000 cuts. Okay, so what we got is this situation. Where are we right now? Well, this was the 2000.com crash, and then of course we had the little bit of the financial crisis, and these are all little blips, right? I mean, at that time, this was market at its all-time highs. In comparison to that bubble, this is a chart from Dan Lowenhertz. He says the dot-com bubble, right? It pales in comparison. When this thing breaks, what do you think is going to happen? It's going to be epic. I think we correct all the way back down to here. And that's not something that I'm looking forward to, but it's something that is screaming. Things rhyme in the markets. And, between 2000 and 2008 analog, especially with Michael Saylor running around, doing the same thing he did in 1999 when he rang the bell at the top when he had to restate MicroStrategy's financial statements because they've been lying about all of their Ponzi schemes. That's happening now with Bitcoin, just different grift. Last time it was with the internet companies, and that was the future, trying to incubate things and basically doing financial shenanigans. Michael Saylor is ringing the bell at the top. Have you looked at MSTR's chart? I'm not going to feature that. We talked about it at length, but it is what it is. All right, so we talked about this. This is last week's chart. I said dollars falling again after a brief spike above 100, and then, of course, the 10-year yield kept rising. Well, what has changed? I mean, this is a very ominous development. Fast forward to last Friday, November 14th, and, rates are rising even though Fed has cut rates. Well, what happened on Friday, on November 14th? Well, it's gotten worse, right? I mean, we got like now the dollar, 99.273, and now the 10-year yield, which is a yield. Remember, when people are not buying U.S. Treasuries, the yield rises. Okay, that's what TNX measures. We're at 41.48. This should scare the bejesus out of everybody, and hence the market volatility that we're seeing. How much longer can they print money to support the market? And I know they rolled out Warren Buffett saying, he's investing billions into Google when he should have done it 12 years ago. All right. Those are all signs of the market tops. It is not sign of validation. Warren Buffett will not buy gold and silver physicals and things like that. He thinks they're worthless relics. But he has too much cash. I mean, most of his positions are in cash, and he needs to put it to work somewhere. And I think he's doing it because he's being forced to. And also, it's an optics that the market wants you to see that, Warren Buffett is finally buying stocks and everybody should go in because the bull market's about to start. Can't start a bull market at the top. Okay, we have to be able to at least get some 18 to 20% correction in this market. It does not go up in a straight line unless you continue to rig the system, and then you wonder why inflation is running high. You wonder why there's so much joblessness, and then you wonder why there's so much political chicanery. I mean, it's just insane, both sides of the aisle. But this is what happens to an empire at the end of its days when the monetary system that it basically enjoyed supremacy over other nations and world is crumbling down. Okay, I told you that Trump was brought in to do the bankruptcy proceeding of the United States. New monetary system is coming, going to be backed by blockchain. It's going to be backed by digital currencies, okay, and tokenization of assets. And that's what's coming, okay, and we need to prepare for that. All right, so let's move forward. And, silver, my thorn on my side, but at the same time, this is where the generational wealth is going to be made on the precious metals. And it is also a warning sign for you all, if you are not trading this, to basically understand why gold and silver, despite the pullback, sharp pullback after a rally this week, it's because the silver and gold slam crew basically cannot have this breakout. However, breakout it will. Okay. And some are thinking that the markets are being, stock market is being sold off in an effort to basically prevent the progression of gold and silver price movement higher. And the reason is that gold and silver really is the bank killer, right? That is the sound money. This is God's money. And basically the issue is that if this is, gold and silver rising isn't anything good. It just means that there's a underlining something, a black swan. I've been talking about that in my videos. Which one is it? Is brewing underneath. And I think we have a little bit clearer picture of what's going on. And that is a lot of the hedge funds are imploding right now, including Michael Burry's shut down his Scion Capital, although I don't think it's because of liquidity issues. If you have understand anything about Michael Burry, story. He went through a lot of crap with his investors at his previous 2008 dot-com ventures. And I think he's trying to maybe privatize it so he has better control and a lot less reporting requirements and redemption requests from his quote-unquote investors. And I think that's why he's doing it. It is not a bullish sign or the fact bearish sign at all in terms of February. I think he's just a smart guy. He basically said, I learned my lesson in 2008. I'm taking my assets basically into a family investment structure. And I think that's what he's doing. Okay, he is short to the gills on AI infrastructure play like NVIDIA, Avagio, AMD, SMCI, all of those chip complexes basically are channel stuffing. I've been talking about that at length for years on SMCI, NVIDIA, and AMD trifecta. By the way, those are all family members and friends. All right. So I said last week that we're building energy to move higher, and we are in the breakout zone at 48.145. Well, silver hit 54. Okay, 54.41 before the market started to wobble. And at the initial set, when the market wobbles and starts selling off, it'll sell everything. It'll throw the baby out with the bathwater initially, and then it will diverge within the next 2 to 3 days. You'll see movement into safe haven assets like gold and silver. Regardless, we are at 50.685. Okay, despite the rescue attempt, or is it following the stock market? Who cares? It's the same thing. And I sometimes tend to believe maybe they're purposely trying to crash the markets to bring the silver prices down. Silver is moving higher along with gold, folks. Okay, 54 was all-time historic highs, and once we stay above that 54, it's going to skip most of the 50s, probably go right into the mid 60s to 80s. Okay, and I've been maintaining that price target for a while. Ridicule me if you want, but that's basically what I'm standing by, and it's going to happen sooner than you think. Silver probably needs a couple of days to, if it wants to, go to 100. It is that suppressed, and the banks are the ones that are suppressing it, because if silver takes off, it means that banks are in trouble. But there is trouble in paradise, folks, because silver is climbing a wall of worry at 50.685, but there's rumblings out of the circles in the news that the Fed had an emergency meeting, New York Fed to be exact. Okay, and I'll bring that to you right here. Let me show you right here. Okay. The New York Fed convened a meeting with Wall Street firms over key lending facilities. They had an emergency meeting that was on Friday towards the end of the market to discuss money market liquidity concerns. Think about this. It's the money market. I know I've told a couple of my clients and members about this situation. Yes, money markets is not a savings account. So let's look at some stocks and go over some analysis here and see what is going on with our markets. Okay, shall we? Shall we do that? Let's do it. Let's do it. All right, so let's start out with SPY. And here's our daily. And, I haven't really, let's move into the weekly. Sorry about that. Because we are in a weekly time frame analysis. And so we continue to have the RSI that's diverging lower. We're at the top, and we had basically a topping candle here, kind of an island reversal, followed by a red candle, and now we have a black candle, all finding support at this green line, which is ADMA. Okay, but it is beginning to turn over. I had thought that we should start moving a little bit more aggressively lower, but we have not. And that markets will do what it will do, but it is signaling that a big move is coming, and henceforth, the title is it's a bull and bear battle at this point. And we had talked about, is there a Black Monday coming? Yeah, I think that's coming. The question is when. It could happen this Monday if you think about it. And so all the conditions are set in place. All it takes is like a flashpoint, or a unexpected, quote unquote, unexpected black swan event. And, Fed just convened that emergency meeting because of liquidity concerns, because of all these private equities that have invested in senior housing that are basically blowing up in real estate market, because of the interest rates are rising despite the Fed cutting rates. it's because too much money has been printed, and the chickens will come home to roost. It's just a matter of when. The question is that are we going to break down below this uptrend line? Once we do, then we have to get past this 20 SMA. I had thought that this week we would blow below the 650 level and then start moving lower. But, markets will do what it will do. We just need to be very, very patient. Sometimes it feels like death by 1,000 cuts, waiting for this move to come. A lot of people are out there saying that no, because of the liquidity injection, the markets are going to move higher and that new bull market's about to start. Well, the problem right now, the problem that we see in the debt market, in the 10-year yield, in the US dollar, and everything else is that too much money has already been printed. It's like a drug addict getting one last big dose before he dies. His heart stops. And that's kind of where we are. And so we have MACD crossover. Death cross is about to form, and that is a very ominous sign. And once that forms, I believe we're going to get that flush down. Patience required. Here is CCI coming off from the overbought levels. We're coming back down where we are below that threshold level. We're beginning to come down into it, and we're going to see some acceleration of selling next week. Okay, the question is, are we going to get a Black Monday, Black Thursday, Black whatever? Okay. Our job is to make sure that we're ready for that. Okay, our job isn't to really say it's going to happen on Black Monday, but we have to keep an eye out for that. Okay, here's the stochastics rolling over, PPO-ADX basically rolling over right into here, making that bearish sign all around. Okay, and then of course accumulation distribution continues to show distribution at the top, and then the ATR is now breaking up higher, so the price range is expanding at this point. So we play the waiting game here, and but as you can see, the chart is super bearish at this point. Let's look at our McClellan Summation Index. The McClellan Summation Index basically, like I said, we were going to test that top end of the range. We're now beginning to move lower, which means that the volatility will be increasing. We have a little bit of a head and shoulders type of formation on the RSI, and it is moving lower. Okay, the only thing that we have is a little bit of a possible bullish crossover, but I think that was established on Friday. Every Fridays, we basically get these type of movements in. And so basically, what we need to figure out at this point is that we're below the critical levels on the MACD. I believe we're going to start moving aggressively lower in the ensuing weeks and days. Okay, so let's look at our favorite friend, silver. And a lot of people are out there saying that this is a double top, and it very well may be. And we'll see how things come out, because the Silver Slam crew is going to continue to fight the silver move higher, because the banking health and the hedge fund and the financial institutions, all the this chicanery from the fractional reserve banking system and printing money out of thin air, all that is going to be exposed once silver breaks out. And I think we're very close to it. Otherwise, they would not be pushing a new monetary system. It's very, very clear what they're doing. I like to see it as a pullback down into the 20 SMA and making a small cup type of handle, and not handle, but cup pattern, and I'm getting ready to break out. The critical thing is that we cannot break below this 43 level down here. Okay, but I do not see this as something to completely worry about yet until we break below this 80 MA and then stay below down into the 43 level. It has a long way. This is a breakout. We just broke out of this channel a little bit. Now we're trying to regain it. Okay, I don't even know if it was a Silver Slam crew. I know they're selling naked shorts into the market still, but the problem is that this week has been absolutely volatile, and everything will follow initially the stock market's direction, especially if a correction is happening. So that's what we got. Let's look at the silver's longer term chart. This is only for 25 years. This side is the handle side of the 45-year cup. Okay. What's positive is that we needed to get over this line. We did close this month. So far this month, we're above it again. Let's see how we close this month. If we can finish above here or just blast out of here, then we have a confirmed breakout. Okay, but we are working towards it. It's basically, we're above there. We're at 50.50. Let's see if the 50s hold this week. If it does hold, there's a strong chance that we're going to start moving higher. Okay, now let's look at gold. Same thing, and people are saying this is a double top. This is our weekly chart right here. And yes, we have a divergence, but we also have a positive divergence forming on the RSI. Okay. And again, this was a function, I believe, of the stock market selling off this week, and that it's get more impulsive. Okay. I think a correction / crash is coming. Okay, it should have come on November 8th, and we were just, volatility is increasing. It's just basically a death by 1,000 cuts for the bulls and bears at this point, but that is something that you should expect. Okay. AMD, I said it was making a climax run. Some BS news came out about how their sales are great, and then it immediately sold off after popping higher. We're moving lower, folks. We are definitely moving lower on this area. This is a topping pattern. We're still above the 80 EMA. RSI is declining. The MACD histogram is coming down. So this is still near the top. Look at this humongous gap right here. Those gaps has to get filled. Okay. And so we're still continuing to watch AMD. NVIDIA, basically, okay, this is the one that Michael Burry is super short on. And basically, we have a bearish engulfing with a black candle. We're sitting right on the 20 SMA, right above the 80 MA. Once this 20 SMA breaks, we're coming right down into that 148 level, possibly this week. MACD is negative right here, folks. Let's look at what's happening with our CCI. CCI is still, bullish zone, but remember, this is contrarian. We're beginning to break below the 99.10 level. Once we get into this level, it's going to get more impulsive. We have the stochastics continuing to roll over, continuing to signal bearish momentum, and then PPO ADX is forming us this negative cup formation. It's amazing to see we're beginning to diverge on the accumulation distribution. We're at the top. You folks, this is not going much higher. Okay, we need to have a correction coming. Okay, shortly, and then ATR is expanding. So these are all signs that a bigger move is coming. All right, let's look at Baidu real quick. And so Baidu has been on a tear, and of course on this correction, like with everything else, it's going to pull back. It's going to be offering a great buying opportunity for those of you putting it into your longer term portfolios. But right now you can see that the 80 MA is curled over. It's coming back down. We've got basically a bearish candles forming, and we have now a downtrend formed, and RSI is negative, and we have MACD crossover. So that is a bigger move coming. I believe we're going to fill this gap and possibly come right back down into this 94.21 level, possibly down into this trend line. Okay, so this is something that we want to be looking at this week, especially if the markets become more impulsive and directional instead of having these wide ranges of choppy moves. But this is part of the development of the market correction and bear market. So let's keep this one on the list for next week. The other one is AppLovin, and this one has been a high flyer, and I still like it for the long term. But right now, with the market correction looming, we've got to look at this. This is the weekly chart. We got the RSI again diverging in a kind of a wedge formation, which means that we're going to have a sharp move lower. And now this is below the 80 MA. It's curling over. We're heading towards the 20 SMA, and I think that that's probably going to maybe at the earlier in the week give us an opportunity to add or and then establish a position if this is what you want, and then bring it right back down. I think that we can start hitting let me get rid of these arrows. We can start hitting these levels at these moving averages. Obviously, the ultimate target would be around like 225. We got the MACD death cross happening right now. These are the easy low-hanging fruits. MACD histogram is negatively divergent. We got the stochastic coming down. We got the PPO ADX forming a nice bearish pattern now at this point. We got this formation, and it doesn't get any easier than this. And so all these stocks are screaming These high-flying stocks are now screaming top and they're rolling over. The last one, we've had positions on this, is basically United Rental Incorporated. These only have monthlies. We're now finally beginning to break down below this uptrend line. So we should have a sharp move lower into the 50 and 100-day moving average. We got the MACD death cross already happening. Look at all these volume, and that's basically screaming that there's more meat left on this bone. PPOADX looks like a finely tuned sell signal right here. Okay, so we do this, and then if it decides to bottom, it will start making these type of formations. So let's keep this on our list. And the other one is Warren Buffett bought Google. Oh my gosh, what did Google do? So as it was about to break below this 5 SMA, we got the negatively divergent RSI announcement comes out. We pop a little bit, but again, these are bearish candles. We're moving lower. Warren Buffett by himself is not going to save this stock market. Okay, but volatility is going to reign. The market makers and the banks are going to do whatever they can to continue to create bounces in which they're selling into. And the insiders have been selling for months and months and months. And I've been warning about this for a long time. So let's look quickly about on the 1 hour charts on the ES and Q and everything else. We basically have a little bit of a double bottom formation. These are rescues. Every Fridays we get these rescues. We'll probably pop right up out into this level. Okay, look at these pivot levels, and then we will come back down. Let's see if we can take out. This is the inflection point. These are critical levels. This green dotted line. Same thing with NQ. Okay, every Friday there's a pump higher. Okay, and then we're probably going to be testing these levels one more time on Monday. If we don't have a Black Monday, we're going to be coming back down. Okay, Bitcoin is going down, and I think cryptos are going to fall a little bit further, but it's going to be offering a great buying opportunity in the next week or so. For those of you that don't have any positions. For silver, okay, there's a little bit of a head and shoulders that has formed, and the question is, are we going to be able to find support at 49,607, or is this did we already bottom there and then we're going to move higher? This is a function of not a weakness in silver market, but also when the market becomes weak and they're about to get into the correction mode, they throw the baby out with the bathwater, and it is prevalent in everything that you see. Okay, so we had a late day rescue. This is something that you will see during the market correction cycles. Okay, and so VIX, we hit 23. I've been saying, hey, look, buy it here, and then we've been holding the $20 calls, and it's just gonna do this up and down, come back down. You load it up, and it keeps moving higher until we can break out of these levels right here around 24, 25. Okay, that's what we're looking for. All right, so that's kind of what we have for now. Oh, one more thing I want to talk about is the 10-year yield. Obviously, 25 basis point kind, we're moving higher. Listen, the New York Fed convenes meetings because of liquidity concerns, and the liquidity is because the US dollar is not circulating anymore. There's so much money that's been printed, it's insane. Okay, the debt market, the fiat money system, the fractional reserve banking system is dying, folks. All right. One last tidbit about XRP, folks. Okay, we are at 229.59. I think that we can probably go lower. I mean, I think it'd be great if we can just get down below this $2. Anything under $1.75 on this pullback, if it even gets there, is a buying opportunity. Okay, don't be these people right here. All right. But I do believe cryptos, as the stock market starts to enter officially into the correction/crash mode in the next coming weeks and days, they're going to throw the baby out with the bathwater, and that's what's happening here. Okay, so here we are, 225.19. Last week we were at 229. Okay, slowly moving lower. Okay, and buy the dip. All right, so here's the black swan events. 10-year yield is rising and US dollar is falling. We talked about that. Fed reverse repo. On top of all that, they basically convened New York Fed convened a meeting to talk to Wall Street firms, and they would not do that unscheduled unless there is a liquidity cracks appearing. We know that there is. Okay, so this is what happened. Okay, just this is from bar chart. Okay, New York Fed convened meeting with Wall Street firms over key lending facilities. Okay, it's an emergency meeting, folks. It's not all it seems. That little ramp job that they did, the rescue job, that happens every Fridays. It's going to, and as the market crashes, you're going to see these whips coming out, okay, intraday out of nowhere. And those are signs of instability, okay, before everybody says that new bull market is starting. Watch the cockroaches. They're going to come out one by one. Okay, watch the hedge funds and bank implosions. Michael Burry is taking a Scion Capital into family structure, and this is the warning. I've been warning for a long time. Again, gold and silver following CTA sell-off. Are they trying to kill the stock market to kill gold and silver? I mean, that's like, biting off your nose to spite the face, right? But who knows? When people are desperate, they do desperate things. 10-year yield moving higher. Okay, all needs to be said. This is why the New York Fed is convening emergency meetings right after the market closes. Think about that. Why didn't they do it during the day? Okay, it's because the big boys need to get out. Don't worry about Warren Buffett buying Google. Okay, all right, he's like 12 years too late for that one, right? XRP, XDC, Litecoin, WLFI, World Liberty, going a bit lower, but great buying opportunity is coming. And it just don't be that guy that says when it pulled back, I didn't buy any. Now it's too expensive. Is crash coming? Time frame has passed for that November 8th, but markets are acting very volatile with late day Friday rescues. These are all hallmarks of a market that is officially about to enter into a crash zone. I expect great volatility coming in this week. Okay, like I said, death by 1,000 cuts. So we need to, if you're an options trader, you need to buy more time. You need to basically shore up enough, close enough targets. Okay, a lot of the 0-day stuff, we do that as a more of an insurance mechanism than anything else. But you either have it or you don't when it happens, and you need to have that insurance. All right, so thank you for following us at Galaxy Stock Market on X. And if you're on YouTube, like us, share us, and above all, comment and subscribe. And thank you. If you want to learn about working with me, you got to email me at coachbrandon@protonmail.com or click on the profile below on how to join our community. Otherwise, let's get some alpha. Be careful out there. It's going to get whippy, folks.